Hi everyone, and welcome back. Imagine you are making a movie about successful business, but the script isn't ready. What do? You start writing down every single event from start to finish, right? That's exactly what we do. The accounting cycle is the screenplay of a business's story. It is what helps us understand every financial step that happened and allows dive the company's life into manageable, easy to understand periods like a month, quarter, or a full year. The accounting cycle journey start with identifying every single financial transactions, and be careful that a lot of transactions happened in any business, but here we are focusing on financial transactions only. Okay, and then we should record them in something called general journal. Think of it as our master list of every payment, sales, and so on. We then transfer each of those journal entries into the appropriate general ledger accounts, organizing everything into separate categories. This means that we transfer accounts with their own names. For example, cash account is transferred to the ledger called cash, not assets. Okay, and so on. These two steps are done during the accounting period. However, at the end of accounting cycle, we create something called the trial balance to make sure that total of our debit and credit are equal. If they are, so this means that 99 of our previous job is correct, and be careful that I didn't say 100%, I said 99% of our previous job is correct. So, and I will explain that in the following videos. Okay, after that, we make adjusting entries. This step may be the most hated step by the accounting student, honestly, even though it is the easiest one. Okay, as I said, we make special adjustments for things like depreciation or expenses that haven't been paid yet. There are many details related to it. I will explain it in the following videos also, inshallah. Okay, after this step, every important things we need, we have. Then we should prepare adjusted trial balance, also to make sure that total debit is still equal to total credit after preparing the adjusting entry. Using our adjustment number or adjusted number, we create the financial statements, which are income statement, statement of owner's equity, balance sheet, or it also called statement of financial position, cash flow statement, and note disclosures. These are the final reports that tell us the story of the company's financial position. They used internally and externally. At the end of the accounting period, we zero out all of the temporary accounts to get ready for the next accounting period, and we end the accounting period finally. Okay, in short, the accounting cycle is a structured process that lets us understand exactly what's happening in a business. It is what makes you an accountant, not just a data entry clerk. If you like this explanation, hit like button and share this video with anyone who wanted to understand accounting. Okay, what do you think is the most important step in the accounting cycle? Let me know in the